let's now tackle the second question on bank reconciliation. So as you can see in front of your screens, you are given a bank reconciliation statement, and most of this seems already completed. So I've got credit balance as per bank statement. I've got one outstanding deposit. I've got two outstanding checks. Then information, the next bit of information, debit amount incorrectly credited. Okay, and then balance as per bank general ledger is obviously missing. Now, instead of making you prepare a bank reconciliation statement, nothing stops the examiner from giving you a bank recon and then asking you questions about the actual recon. So please make sure, remember, accounting is not just about doing financial preparing financial statements or preparing financial records. That's a word I was looking for, preparing financial records. It's also about analyzing financial records. So that's what we're doing here. We are analyzing this bank recon. So let's get started with our first question. Does the bank statement reflect a favorable balance or an unfavorable balance? Briefly explain for 3 marks. Let's just change the color of my pen. Right, so let's go back to the bank statement, and as you can see, there is a credit balance as per bank statement. Now remember guys, bank statement is something external, okay? Obviously it is prepared by the bank, and their books are generally the opposite of our books. So in our records, debit is favorable, but in their records, credit is favorable. Remember, they see us as debtors. Sometimes they also see us as creditors if there is an overdraft. So in their records, credit is favorable and debit is clearly unfavorable. In other words, an overdraft. So looking at this question, you've got a credit balance as per bank statement. So the bank statement reflects a favorable balance. Okay, so favorable balance, 1 mark for mentioning favorable, and then you are asked to explain, and your explanation should be in the bank's records. So in the bank's records, remember it's external, credit reflects a favorable balance. Okay, and clearly they are telling us that there is a credit balance. So quite straightforward. Again, just make sure you don't mix up the credit and the debit and you confuse our records to the bank's records. Bank statement prepared by the bank. Right, let's now move on to our next question. Briefly explain why check number 49 and 55 are outstanding. Provide a reason, or rather a different reason for each check. Okay, so if we go to the checks itself, so we've obviously got check number 49, dated 21st of March 2010. We are now the 31st of March 2010, and this check was issued for 3,000 Rand. So clearly the check was issued 10 days ago, and it is possible that the person that the check was issued or given the check hasn't as yet cashed the check. So remember, the check is not cashed. Obviously, that is why it is an outstanding check. It could be that that particular individual just didn't have time to go to the bank. So as a result, remember, you have 6 months to cash a check. I know checks are generally not used in today's day and age. We normally make use of EFTs, but remember guys, in your syllabus we still talk about checks, and a lot of businesses, believe it or not, still use checks. So this particular check, as we can see, it has not been cashed. Okay, it has not been cashed, and clearly the person that the check was issued, or rather the payee, probably did not have time to cash the check, didn't take the check to the bank. Right, now let's look at the second check. Pay attention to check number 55. Check number 55, remember this bank recon is prepared for the 31st of March. So the check was dated the 18th of April 2010. In other words, this is a post-dated check. The check was issued in March. However, the check is dated for the 18th of April. So in other words, we're probably waiting for the supplier or the service provider to complete an actual service for the business. I'm just giving you an example. And therefore, we've issued a PDC, a post-dated check. So in this particular case, the payee has no option but to wait. They cannot cash the check as yet. So they now need to wait until the 18th of April, and that is when they can go to the bank and cash the check. So your reason for the second check, right? Why is it outstanding? It is a post-dated check, and the payee can only take the check. Okay, so I'm not going to write all of that, and can only be cashed. So the check itself can only be cashed on the 18th of April. Okay, so as you can see, two very different reasons. The first check, the person is probably a bit too lazy to go to the bank. The second check, they cannot go to the bank until the 18th of April. Okay, we've got just under 5 minutes. Let's see whether we can complete the rest of the questions. 2.3, calculate the balance that will be reflected in the bank account in the general ledger on the 31st of March 2010. State whether it's favorable or unfavorable. So obviously we're now looking at from the business's perspective, the business's records. Right, so we're going to start off with credit balance as per bank statement, a positive 6,000. Okay. To that 6,000, we've got one outstanding deposit. And remember, an outstanding deposit is obviously added. Okay, so outstanding deposit plus 2,000. Then we've got two outstanding checks, and remember, checks will decrease your balance. So we've got a check for 3,000 and a check for 7,000. So minus 3,000 minus 7,000. Okay, and then we are also coming across an error made by the bank. So debit amount incorrectly credited. Remember, this error is obviously made by the bank. So clearly, we are telling the bank, debit our account by an incorrect credit. In other words, take away the 1,000 Rand. By mistake, you deposited 1,000 Rand into our account. You now need to debit our account. Okay, I know it sounds a bit silly to tell the bank to debit your account, but remember guys, you've got to be ethical. Okay, so if the bank has taken money from your account in error, you're going to clearly tell the bank, hey, put the money back into my account. Similarly, if the bank puts money in error into your account, you're going to then inform the bank that that money doesn't belong to you. Okay, so we're now going to subtract the 1,000. Right, and that should give us our balance as per general ledger. So let's quickly calculate that balance. So we've got 6,000, right, plus 2,000, okay, minus 3,000, and then minus 7,000, and then finally minus the 1,000, the error. Okay, and your bank balance is sitting at the moment minus 3,000. So clearly in your records, bank has a unfavorable balance. Okay, there's an unfavorable balance. In other words, in your records, bank is credit. Remember, in your records, credit is unfavorable. Okay, right, we've got just under 3 minutes, in fact, just over 2 minutes, not much time. Let's quickly see if we can do 2.4. Check number 55 is outstanding. Briefly explain the effect this check will have on financial statements in the balance sheet if the financial year ended is the 31st of March. Now, I did discuss this earlier on. Remember, this is the entry that needs to be reversed. So in other words, your bank account will be affected. So in this case, bank overdraft, okay, because we just saw bank is unfavorable, as well as trade creditors or trade and other payables will be affected. So remember, even though you issued the check, let's quickly go to the check amount. So the check amount was 7,000. Even though you've issued the check, technically that money hasn't been paid to your creditor. So your trade creditors should increase by 7,000 in the balance sheet or in trade and other payable note. And remember, your bank overdraft, you didn't really pay the creditor, so your overdraft should decrease also by 7,000. Okay, let's fix that. So it will decrease by 7,000 in the balance sheet, on the face of the balance sheet. Okay, right, just over or under a minute now to go. The very last question, explain why it is necessary for every business to prepare a monthly bank reconciliation statement. I'm just going to quickly discuss this, guys. Remember, a bank recon is an important internal control over cash. So it's a way of checking entries made in your records against the bank's records. It's a way of identifying errors and omissions, if there's any fraud taking place, if money is missing from your bank account.